What's going on, guys? Thank you for tuning in to episode number 9 of the Stokesy and Stoner Crypto Show. And tonight we have an absolute jam-packed one for you because we're going to be going through the road to $100,000 of Bitcoin. Why is this important? Well, obviously because Bitcoin's gone to $100,000, but more importantly, we're going to be analyzing the recent price moves, what this means in the longer term, what are the experts saying in relation to, has this climbed too quickly? What should the moves have been up to this point? And what's Bitcoin going to be doing in the near future? Are we going to be having a pullback? Have we grown too quick? Or is Bitcoin going to keep rallying from here? Other questions around that are things we're going to explore, like, is this institutionally driven or is this retail driven? There's a big difference there, and this is going to give us a good perspective on what may be happening in the near future. In addition to that, we're going to be looking at Bitcoin ATMs around the globe. We've just hit an all-time high. It's very exciting stuff that shows the growing interest in Bitcoin being accessible around the world. And we're going to be diving into that. Adam, what else are we going to be covering in tonight's episode?
Bo, great to be with you again. Of course, we will be looking at these markets. What a big week. In fact, what a big month, what a big run. We're also going to be exploring Facebook again. No, this thing has not been done to death. This is bigger than Ben-Hur, and we need to look at this space because this is big. This is really big, and it continues to grow. Also, as we get on that road to the $100,000 Bitcoin, we're going to be exploring the newbies coming into the market and why they're dragging behind, and in fact, looking at if this could just be institutional investment. And of course, we close off with our coin picks.
It's going to be a jam-packed one, guys. Thank you for tuning in. Let's get straight into it. So welcome back, guys. You're here with Bo Stoner from Cryptocurrency Australia and Adam Stokes from YouTube channel Adam Stokes. Really glad to have you here. Thank you for tuning in to episode number 9 of the Stokesy and Stoner Crypto Show. We are having so much fun with this. Starting off, guys, looking at the cryptocurrency market. What are we going on at the moment? So we've just hit a market cap of 336 billion. Fantastic. Things are growing. We're seeing constant new money coming into the space. One of the indicators I like to look at for like a hype indicator to see if things are getting out of control are things like trading volume. So we're sitting here at a market cap of $336 billion, but the trading volume is $68 billion. Why is that relevant? Well, because the trading volume is within what I would call the mean average trading volume of what I would expect at this market cap at this point in time in Bitcoin and cryptocurrencies maturity. If I was seeing trading volumes of $120, $130 billion, I may be thinking a bit of FOMO rush has come in. And so there's a bit too much speculative money coming in. Therefore, the risk of a pullback is greater. So essentially what I'm trying to say is I think this is a good, healthy sign. We can see Bitcoin dominance, 59.9%, nearly at 60%. Bitcoin is taking some of the market share from the altcoins, to be expected. This is what happens during bull runs. Overall, a healthy ecosystem, especially if you're holding on to Bitcoin right now. Adam, over to you. What is your take on the market right now?
Mate, really exciting stuff. We've been keeping updates on this happening throughout the week as we've seen it smash the $10,000 mark. For ages, we were wondering, is it going to cross that 5-figure mark? And it did. It went straight past it and crept very quickly up to bouncing around $11,000. So it visited $11,000, pulled back, visited 11,000 resistance, then support, then resistance, and now we can see a kind of consistent matter of fact that it is around the $11,000 mark. Looking at the markets right now, price currently Bitcoin $11,308. Good on you, Bitcoin. Go Bitcoin. 4% in the last 24 hours, but 22% in the last 7 days. That is just mammoth. Now remember, a 20% to 22% climb in 7 days isn't a big deal for some of the smaller coins with the smaller market caps. But when you have the number one coin driving the market forward with a 22% climb in 7 days, it is looking good. Going further down the charts, Bo, over the last 7 days, let's look at the last 7 days. Ethereum up 15%, another double digit in a top coin. Bitcoin Cash, well, we've got to mention it because it's been up in the top 5 for ages, 12%. We've seen a little bit of a slowdown with Bitcoin SV, but that thing was going out of control, going, in my opinion, too high, too fast. And look at Tron. We'll be talking about this later. Tron, perhaps after that news of Sun talking with Buffett, 18.63%. That's looking at number 2. But overall, Bo, I'm very happy with this very stable sea of green. It wasn't climbing too fast, and there's a bit of resistance, then support, resistance, support. I'm happy. Go Bitcoin and go crypto.
Yeah, and some other winners actually that have come out of this, one of the coins that just seems to slowly be creeping up, never making too big a moves, are things like Binance Coin, which is nearly at $50 Australian now. This is no joke. Just on 2 years ago, this coin sold in ICO for 10 cents. So if you had to spend something like $500, you'd probably be looking at over $100,000 right now if you had bought Binance Coin and ICO. Absolutely unbelievable. Other coins like Neo up 30% in the past 7 days. Neo pushing up now to $17.70 US. That's probably about $21, $22 Australian. So we're seeing a few winners actually creeping up on the back of these Bitcoin gains. But overall, Adam, like you said, this is a healthy market. This is a good market. What we're seeing, to me, and given my experience, this is a fundamentally driven beginning of a bull market. This is what we want to see. We're not seeing too big of swings, but more importantly, on your point earlier about Bitcoin hitting 22% in a week, sure, it's not big in terms of crypto percentages, but when you're looking at a coin over $10,000, every 10% is an extra $1,000. And when priced in US and converting to Aussie dollars, you're talking about a 1.44x increase in the dollar value. So these moves, 10% is a huge amount.
Yeah, and when you're looking at the total market cap, we're talking about billions and billions coming in there. Top gainers, just for reference, H share coming in at rank 41, but that had the biggest move of I'm looking at a different site here, 617% in the last 24 hours. H share 617% in the last 24 hours. But looking at the biggest movers, Bo, over the last 7 days, also H share, and I've also got V chain here. V chain, questionable coin, but coming up at 37%, Dent 35%, and Neo, as we mentioned before, in there at number 4 as the top mover over the last 7 days at 33%. Many had said Neo had died, but we can see Neo coming back, raising from the ashes. And just as a bit of interest, the biggest mover coming in at 1, 2, 3, 4, 5, 6, and I haven't seen this in the biggest mover chart for ages, is Bitcoin. Bitcoin's coming at the 6th biggest mover in a week. Looks good. Looks good to me.
Yeah, look, all things good. Are we going to see this continue? We're going to get into that later on in this episode. Adam, why don't we move into the first story for tonight, mate? Why don't you give us a rundown on what we got going on with Facebook as this story and, this narrative unfolds?
Okay, so Facebook, I think you've done 2 stories on it, Bo. I've done 2 stories on it, and we also spoke about it last week. And this thing cannot be underestimated. And what I wanted to look at this article here, rather than reading the whole article to you, I wanted to make mention of a quote that's further down. So if we scroll down, about 2/3 down the screen here, it says, speaking last week on CNBC's Closing Bell, Waters sounded the alarm bell. And this was a very powerful quote to me. It says, "This is like starting a bank without having to go through any steps to do it." And of course, we have some questions about Facebook and some of the ways that it has conducted itself in the past. But they're creating their own cryptocurrency. They're going to be located in Switzerland. It's going to be an alternative to the dollar. And so, yes, I think it's very important for them to stop right now what they're doing so that we can get a handle on this. So I go through this story over and over again, not this particular article, but the whole Facebook, I don't want to say saga, but case study of where this thing could go. So to catch up, for those who may not know about it, Facebook is talking about releasing their own cryptocurrency. The project is called Libra, and the coin is called Global Coin. The coin will be pegged not to the US dollar, but to a series of values to make it a questionably or arguably a more stable coin. There is no set supply in this coin, so just like fiat currency, they can print lots of money. And just like this statement says here, it is essentially creating a bank without having to go through any steps of what other banks go through. Now, I listened to a fantastic podcast with Caitlin Long going through this, and Caitlin is well respected in the space, and I really got a lot out of what she was saying. And there's a lot of really powerful points that she gave in this podcast. But there's one that really sticks out in my mind. And she said, imagine governments and corporations working in unison to get a complete hold of what the people are doing. Now, I paraphrase that terribly, but basically what she was saying was, and what we should all consider. So in government, you have governments having a certain amount of reach into the population and into the people. And in corporation, you have them doing the same thing. For example, governments know your tax file number, and Facebook knows your social media activity. Now, they are separated to an extent. And we can see in the recent hearings in America, America was putting Facebook on the stand and saying, what have you been doing with the people's data? So here you had a big corporation being held to account by the government. Now let's flip this on the head. When you've got the government doing something questionable, power to the people through the social platform of something like YouTube or Facebook, where the people can in turn hold the government to account by putting them in the public spotlight and saying, hey, what are you doing? And through a democracy, we have a thing called voting that can, in one way or another, get governments out. But imagine a situation where governments and Facebook, or governments and social media, synergize to a point where it's not separated. And on one hand, you have a social media giant like Facebook with over 2.5, the number keeps changing, but we'll say 2.5 billion monthly users, a third of the world's population using this centralized social media. And then you also have the government synergizing with this corporation. I can actually see the importance of separating these two. Now, as you and I have spoken in the past, this is a double-edged weapon. Facebook getting into the banking space, knowing that we can't trust them with our data, is scary. However, if you think about how much Bitcoin has grown without 2.5 billion people using it, with just a, if you will, a crypto community raising the profile of it, you can start to see the good and the bad of this. The good is that Facebook is going to launch this thing to the moon overnight, and we can see within just the last week the amount of private entities and banks that are now finally waking up and going, maybe we should do something about crypto. And of course, the banks are terrified because banks have always been worried about crypto to an extent, but banks have been slow to move on this because, as I mentioned before, there wasn't 2.5 billion people using crypto. It was just something growing sort of naturally in the background. But now that we have the tsunami of Facebook users coming through, banks are panicking, governments are panicking, and I am fascinated to see what will happen in this space. Where is Facebook going with this, and what are the governments going to do?
You know, it's interesting, Adam, and there's a lot of angles we can look at this with. Now, there's no doubt that the awareness of cryptocurrency driven through Project Libra and Facebook is positive for the overall ecosystem and for providing a gateway into Bitcoin. But through my own research, my fascination with American politics and somewhat autistic tendencies for looking into law and things like that as well, I honestly don't think Facebook's going to get off the ground. Now, I know this may sound a bit controversial, and I'm probably a minority in this, but guys, I must say there is a lot of pending litigation against Facebook right now. Just today, an article came out from the Australian government. Well, sorry, it wasn't Australian government. It was from, I believe it was from MSNBC, but it was in relation to Facebook and Google are going to be audited and investigated by the ACCC. Now, in the United States, you know, we've got Maxine Waters. I really think that what is coming from Maxine Waters and the other senator, Elizabeth Warren, are full of air. However, I believe what we're going to see in the future is something called a Digital Bill of Rights. Now, a Digital Bill of Rights is going to be drafted that is going to regulate big tech companies. Now, given Facebook's history, its track record, given there's a lot of pending litigation, potentially a class action lawsuit, I wouldn't be surprised to see that. And its track record, I honestly have major doubts this project is ever going to see the light of day. And I must remind people that Facebook as a company is registered, I believe, maybe not as tax domicile, but the company is registered in the United States, therefore it comes under the jurisdiction of the United States. So what are we going to see? Look, who knows, but overall, is it a good thing for crypto? Yeah, but is this project ever actually going to launch? I don't think so.
No, and ultimately, even if it does launch, right, and you have a currency, so people will come into there. Why would I stick with Libra or Global Coin, which is the same as fiat currency in the sense that it's unlimited? It's not, when they say it's pegged to something, well, even if it's pegged to the US dollar, well, then you're pegged to something that's not real. And even if you're pegged to and it's not going to be pegged to the US dollar, it's apparently going to be pegged to a group of values, but even those values in themselves are pegged to a fiat currency. So, and combined with a unlimited supply, you are dealing with an inflationary currency. So why on earth, once I start to realize this, would I do that? Now, what Caitlin Long was saying in her article, in her podcast, she also raised another really good point about third world countries and developing countries are in fact experts comparative to us in our privileged first world country about understanding holding money. So if you look at the good people in Venezuela, they understand better than us from first-hand frontline experience how deadly inflation can be on their money. Now, when they get exposed to two currencies, for argument's sake, Global Coin through Libra and Facebook versus Bitcoin, well, they understand inflation better than anyone. And if they've got the choice between the two, of course they're going to take Bitcoin. Why wouldn't they take Bitcoin? They already know how centralized currencies work. They know better than everyone. And all these third world countries are really going to adopt, in my opinion, if they've got a choice, a decentralized Bitcoin over a centralized Libra coin. And I just wanted to show you a little meme that was quite funny out there, Bo. It was the Libra. So this is really funny. It's a meme, and there's even a spelling mistake in it, but it doesn't matter. On the very last line 14. But if you remember Farmville, which was, I never got into it, but I remember my friends playing it, and it was actually quite annoying because they were always talking about I've got to go harvest, and that there was this app or game on Facebook, and it had cash. And it had cash. So the point of this meme is that this isn't actually the first time that Facebook has made money. This is now the second time that Facebook has made money. And as you can see here on this little meme, both are pegged to the USD, but only Libra is owned by an evil corporation where Farmville Cash wasn't. One's owned by a lizard. That's a go at Zuckerberg. And if you look at Zuckerberg, people are... Yeah, I shouldn't pick on the way someone looks because you can't really control that.
He is a cyborg, dude.
Yeah, was it you that was saying it? He looks like an android.
I said he looked like an android. Honestly, if you had a bunch of scientists in a lab and you said, make a human, he's like version 1. He is what version 1 would be.
If you also think of Ethereum creator, if you look at those two, it's the same. I started thinking,
Vitalik, man.
Yeah, if you take Vitalik
got to hit the gym, brother.
And you look at them, they're cyborgs, but hey, I'm not going to judge someone by the look.
No, but just
but it does, it's out there. Going back down this list, Libra, hated by the US government, yes. Farmville Cash, no. Anonymously purchasable, well, Farmville Cash is. So if you actually think of Farmville Cash, an existing type of cryptocurrency, it's not cryptocurrency, it was a digital currency, a game currency, that in fact was more decentralized or more anonymous than the new coin that is meant to be, or based on a decentralized model. And then there's a bit more fun where it says fun can buy a whole farm and purchasable. They've made a typo there, purchasable with Bitcoin. I think it's hilarious. Whoever wrote this, you're a genius. I can't find a reference to it, but good on you. That's good fun. But moving on to the advancement of crypto, Bo, what's going on with these 5,000 ATMs in the crypto space?
Yeah, so this is a feel-good one, and I like to see this, having had first-hand experience with seeking a Bitcoin ATM when I was in Japan, and really struggling, actually, that this is one a bit close to my heart. The title of the article here is there are now more than 5,000 Bitcoin ATMs around the world. Just reading through a few paragraphs here. The total number of Bitcoin ATMs, they're calling them BTMs. I like that. That's good. Worldwide reached 5,000 for the first time. Monitoring Resource Coin ATM Radar confirmed June 24th. According to the latest statistics, there are now 5,006 standalone BTMs in around 90 countries, where cryptocurrency users can buy or sell Bitcoin. Some machines offer both services simultaneously. The large data caps a protracted period of growth in the BTM sector, with the US leading the trend as more and more locations and formats appear. June has seen a total of 150 installations, around 6 per day. General Bytes recently overtook Genesis Coin as the manufacturer with the largest number of BTMs installed. Now, when we come over here to Coin ATM Radar, it gives us some really good statistics on what's going on around the world. This is the place you come if you are in a country and you're looking for a Bitcoin ATM close to you, and this will tell you. So as you can see, we've got 5,006 crypto ATMs now across 76 countries, 41 producers, and 542 operators. Now, we've even got some maps here by cryptocurrency that show us what we got going on. And as we can see, there's a ton in North America, in the United States. Not so much in South America, which is where you would actually expect these to be, in places that are having issues with inflation. My guess is governments there have made it very difficult to get ATMs approved, which is why you're not seeing them. Otherwise, they would be everywhere because they'd be huge business. People would be pouring their dollars in as fast as they could get them in there. As we can see over here, in Europe, we have a number of them. In Australia, we have quite a few, not as many as you might think. But overall, this is a positive sign. And generally what we're going to find is, when you think about it, why would you use a crypto ATM? Well, it could be that your business deals in cash. You might run a market. You might just run a cash business and you're looking for an ATM to pump the cash into. Or you're in a more third world developing country that's having major issues with hyperinflation. You want to buy some Bitcoin. Exchanges are either banned or internet access is difficult, or maybe it's largely a cash society. Japan uses cash for just about everything. So some cultures are different in how they use their money. And so you're going to see ATMs have kind of different value propositions depending on the economic situation in the country at that time. But overall, this is a positive sign. It's showing more retail general interest for people to get some exposure to crypto. Your hardcore hodler is unlikely to use an ATM. They're on exchanges buying and hodling and sending to hardware wallets. But your everyday person, this is their opportunity to stick $20 in, stick $50 in, and to get some Bitcoin. So overall, I think it's a really positive thing.
Yeah, the ATMs are many people are like, well, what is this thing? Why do I need a Bitcoin ATM? Well, it's effectively an on-ramp, but you need to somehow get into the crypto space initially. There's only really two ways to get Bitcoin. Well, three. You could have it given to you, but you have to buy it or you have to mine it. And if you're going to buy it using currency, you've got to get an on-ramp. Now, if you remember, Bo, we were talking, I think a couple of episodes ago, we were talking about the coin machines in supermarkets. Is it Coinstar? We don't have them in America, where basically you take a jar of pennies or whatever, quarters and dimes, and you pour it into this machine, and it would give you a receipt, and you could turn that receipt into cash or a voucher in the shop or the supermarket that you're in. But now they're offering a function where you can in fact pour your coins into a machine, and instead of taking fiat currency or a gift voucher, you can choose to take Bitcoin. So combined with these 5,000 ATMs, and I think it was either 25,000 or 2,500 machines in America, we can now see thousands of on-ramps just in the hard cash digital space that is going up to a machine and putting your money in and buying it. But I'm wondering, from what you've seen, is it also an off-ramp? Can you take fiat currency out of these machines?
Some of them you can, but most of them I have seen that offer that capability are offline, or that service is offline. And I think it's because a couple of reasons. One is people don't generally do it, and the reason why is because the rate they give you has heavy premiums on it, so you're likely to sell it at like an extra 10 to maybe 15% premium than what you would on an exchange. So it's you're going to get much better money by selling it on an exchange than you would in an ATM. And I think because of that, these ATMs are maybe not storing a whole lot of cash. And also, these ATMs maybe, I'm totally speculating here, but maybe don't want to find themselves in the position where they're facilitating money laundering.
Yeah.
To be quite honest. However, many of these ATMs have got cameras in them, which are probably running facial recognition. Many of them require an email, and some of them maybe even a license to perform quick KYC before they allow for the selling to go through. So, I don't know, maybe it's a bit of the chicken and the egg thing, but the ATMs that I've seen that have had it have always been offline, and I don't know of anyone personally that has sold some Bitcoin at an ATM. Because the thing is too, is we have things like 10x cards now, or crypto.com cards, that allow you to store your Bitcoin on these cards, and then you can just use these cards at an ATM instead of having to get your Bitcoin wallet out and actually go through the process of scanning it and going through the process. So I think using a card's maybe a bit more efficient at present.
The other thing to consider is, why do I want as crypto, I'm taking from Crypto Lark here, he says it a fair bit, and I really enjoy how he says it. He says, why would I want a big pile of dirty old fiat cash? And it's really a powerful statement, because it's like, and it really makes me think in spending terms. When you've got a deflationary, an asset, a currency that deals with inflation, you kind of get rid of it. And that's how we're living at the moment. We burn our money, whether it's through a credit card or just in cash. We just tap and pay, and away we go. And it's like, oh, well, more money will come. But when you've got a deflationary asset or currency like Bitcoin, every single time I spend any of it, if at all, ever, I'm like, I don't know if I want to let this go. I'm happy to. It's weird. It's just a whole new paradigm of thinking with money. If it's $5 on a coffee, cool. If it's $5 worth of Bitcoin on a coffee, I think I'll go without the coffee and just have a glass of water, because that $5 coffee in 10 years' time could actually be worth a $5,000 coffee. And Adam, just like that pizza.
And Adam, you are tapping into the fundamentals of Austrian economics and free market principles and hard and sound money by what you just said, because the principles of Austrian economics in relation to hard money is time preferences, as we've spoken about before. And societies that use hard money, so things like gold, glass beads that were used in Africa, that were very, very hard to produce at the time, rice stones in the I can't remember what the society was called, but they used these things called rice stones that they mined. It was a special kind of stone, and it was extremely time-consuming and difficult for them to mine this and to shape it into the form of the currency. What that does is that encourages something called a low time preference. Low meaning that your long-term outlook on life becomes extremely important and strategic for you, because you want to see your personal wealth grow over time, and because you're using a hard money, a money that is extremely hard to produce, you are less likely to cause conflict, you are less likely to waste your money, you're more likely to make smarter decisions with your friends and family, and you're more likely to play the long game safely in life to ensure your wealth appreciates over time. Fiat money is easy money. Bitcoin is hard money. Fiat money is high time preference. Bitcoin is low time preference.
Mate, great analogy there. And if you also think about the environment, so you would actually see, when you're dealing with hard money, I'm not going to waste my money, as example, on a cup of coffee or a disposable cup, or throw away clothes or just crap. So not only, because the argument is in economics that there's this balance, right? So they say it's environment versus economics. That is, to stimulate an economy, you've got to spend money, and to spend money, you've got to make shit. You've got to make stuff and make landfill, essentially, in the big picture, because it all ends up in landfill. But that's not always necessarily true. And that's, the example is hard money. When I'm going to invest something, when I'm going to spend this money that's really hard to get, really hard to build, am I going to spend it on something that's just going to end up in landfill, or am I going to spend it on something that's far more valuable, like longer lasting? I mean, essentially, most things, pretty much everything has an impact on the environment. Even you and I sitting here breathing right now. Am I going to spend it on some throwaway t-shirt that's going to end up on landfill, or am I going to put it on bricks and mortar in a home that can look after my family? Am I going to put it in a throwaway cup that's just going to end up in landfill, or will I buy one cup that I can use 10,000 times? So the flow-on effects in not just for the individual, but collectively for the environment when you're using hard money, have great effects. And we are going to see this where people are going to be far wiser and far smarter with their money, as opposed to just, let's go shopping, guys, let's go just waste some money.
You couldn't be more correct. I agree with you on all of that. I mean, the time preference and the socio-economic flow-on effect that hard money versus easy money has cannot be underestimated. And to fully appreciate this, I highly recommend everyone go and read Safer Dan Moore's book, The Bitcoin Standard. It honestly is, from the first page to the last page, the best read in Bitcoin and money you will probably ever read, unless you get into like hardcore stuff on Murray Rothbard and Ludwig von Mises, which I myself haven't got into yet, because the audiobook for Mises alone is 42 hours long. Like, this is... Austrian economics is just, goes off. And another person you should be following is Trace Mayer. But couldn't agree with you more, Adam. Very interesting stuff, mate. Why don't we move on to the next one here? What do you got for us? Crypto traders, Bitcoin newbie surge. Mate, tell us what we got going on.
Okay, so this is really important. I'll just read the first part of this article before we get into the graph that's contained within. So traders on crypto Reddit are comparing Bitcoin's popularity on Google Trends to the last bull run to figure out if crypto newbies are playing a role in the current rally. So far, the numbers indicate that Bitcoin is rallying without much excitement in the mainstream, and that it will take more than BTC at 10K to reach the level of excitement last seen in December 2017 when Bitcoin hit 20K. The article goes on to say, as a quote, "We are only at 50% of the previous ATH. If this is another big bubble event, we are in the extremely early stages. Only people already in crypto care about this right now." So this is a crucial factor to consider. So scrolling down to this graph, now it may not look like much at the moment, but we can see this is Bitcoin, the term Bitcoin searched over Google Trends over time. So we can see at the beginning of the graph at 2004, no one cares. It's a flat line. After 2008, still pretty flat, and then towards 2010-11, we get a little bit of bump. In moving forward along the graph, when we get to 2017, so the big bull run where most of us really heard about it, and when it went insano to 20K, you can see this massive spike. Now, what's important about this and this article is that we can see that we have in fact reached 50% of the shelf price of Bitcoin with less than 20%, probably less than 15% of the search volume on Google Trends. What does this all mean, Bo? It means that institutional, as in big corporations, are pushing this price up, possibly. And it also means that there is still significant, unforeseeable space for growth in this coin. So FOMO, the fear of missing out, arguably pushed this coin up in the past, in the bull run of sort of October 17 to December 2017, when this thing just went insano. And we can see this reflected on this graph with the amount of people searching the term Bitcoin. Here we can see that we are over halfway to that previous price cap of 20 grand American, and we don't have hardly any people looking for it. So where is this money coming from? And there's so many other factors involved with this. So before, so many people were ignorant about Bitcoin and crypto. I was one of them. I'm like, well, I'd heard about it and I knew the theory of it. I thought I did. But over the last 2 years, or 18 months, in this very, very long and cold bear market, people have got smarter. People know more about the dangers of ICOs. Altcoins, despite all the, if you will, bad media about some of them out there, have really developed significantly. Look at Cardano, look at Skycoin, look at Ethereum, application coins that actually do something. Look at the amount of money that has been invested into these coins, into these applications, into these projects during a long, cold bear market winter. And once the crypto spring starts to blossom, and we see this chart alone change, it leads me to believe that 100K is just a stepping stone to where this bad boy is going.
Yeah, it's a great segue, getting into what I'm about to cover on the path to 100K. Now, all sensationalism aside, this is serious. Like, to those that may be new to this space, 100K for those that have well researched and been in this for a while is like natural evolution. Like this is as normal and natural as Bitcoin going from $1 to $10. Price becomes irrelevant when you have a reducing supply, when you have an extremely scarce resource, and you have utility, value, and usage going up. The hash rate of Bitcoin just hit an all-time high, right? So we have all these metrics. We haven't even gotten countries involved yet. At some point, countries are going to start mining Bitcoin. I see that as another natural evolution. But getting into this, like into some real detail, looking at some fundamentals. Right now, we're looking at TradingView. We're looking at the price of Bitcoin at $11,378. Just a few months ago, when Bitcoin was around here, I made a video, and I'm very proud that I did. Right around, when was it? It was right around December, January. I believe it was in December, when the price of Bitcoin was significantly under an indicator called the 200-day moving average, daily moving average. That just takes the average of Bitcoin over the past 200 days and then plots it as a line. The price of Bitcoin was so far under the 200-day moving average. My comment during the video was, look at this. Like if you were to assume Bitcoin was going to follow in a semi-linear fashion the 200-day moving average, look at how cheap Bitcoin is right now. And at that time, Bitcoin was sitting around $3,500 to $4,000 USD. Just 6 months later, we're at $11,300 and now just hit $77. Like, this is no joke. But what we're going to get into is the recent moves and how the price has diverged from the 20, the 50, and the 200-day moving average. More specifically, the 200-day moving average. And to see what this actually means. So just getting a little bit more granularity here on the chart, what we can see is the 200-day moving average hasn't had a chance to catch up. The average hasn't had a chance to catch up with the recent rally. So we've seen the price deviate significantly from that 200-day moving average. What does this tell us? Well, it tells us the price is perhaps on a short-term pump. It tells us perhaps the price has broken fundamentals and some speculative value has entered the space. It may tell us that some retail FOMO is driving the price up because we're seeing that divergence from this fundamental indicator. But it gets more interesting than that. And let's have a look at some experts on Twitter to get their comments on what is going on. So here we're looking at Peter Brandt. Won't get into him in detail, but highly respected in charting and the crypto space. And this is what he says. Bitcoin takes aim at a $100,000 target. The Bitcoin USD is experiencing its fourth parabolic phase dating back to 2010. No other market in my 45 years of trading has gone parabolic on a log chart in this manner. Bitcoin is a market like no other. Now moving over to Trace Mayer. This came out yesterday. Overextended bull markets loved until correction. Obviously you can know what he's getting at there. 2.09 Mayer multiple. $5,085 BTC 200-day daily moving average rising around $35 a day. And what he's getting at is the 200-day moving average currently back on TradingView is sitting at around $5,200. So the price is over double the 200-day moving average. Historically, higher only 14.79% of the time if we take past performance as an indicator moving forward. Thus, very low probability of 40,000 in a few months. But with Bitcoin, anything can happen. Interesting. Moving on. Next one here. Again from Peter Brandt. The obnoxious Twitter Millennial Index, OTMI, is registering extreme FOMO. That is always a sign to consider taking some money off the table. And what he's getting at is just like an anecdotal assessment of the euphoria he's seeing on crypto Twitter. But here's where it gets, I think, very interesting. And Adam, this is what you covered earlier, and this is in relation to Google searches. I agree with you 110% that the people in crypto right now that are euphoric are OGs, are not new people entering this market. How do I know that? My YouTube channel is growing fairly organically. I've been making a lot of content, so my YouTube channel is growing nice and slowly. During the bull market of 2017, I was getting consistently 5 to 10,000 views a video. I got over 10,000 subscribers in 1 month back then, as there were so many new people entering the space. That correlated just about 1-to-1 with Google Trends. Tons of new people were coming in. Why? The mainstream media, the world was reporting on Bitcoin hitting these all-time highs. We have not seen that yet. This is institutional. This is fundamental institutional accumulation that are starting to get into Bitcoin, that are hodling long-term. Adam, as you mentioned, which I also agree with, the market has matured. There are new hodlers from the 2017 bull market that bought and held. So you now have increased scarcity. And in 332 days, we have the Bitcoin halving event. So the fundamentals have never looked stronger. Does that discount the charts? No, it doesn't. Does that discount other indicators? No, it doesn't. There could be some factors there that, if perceived a certain way, could be saying markets are looking hot, maybe time to take profits. But then on the other hand, I'm looking at these fundamental indicators and going, we haven't even started yet. Like, this is just the first couple of little snowflakes before the friggin' avalanche starts of money. That's kind of the way I'm seeing this. But like Trey said, anything can happen.
There was an article I read, I think yesterday or the day before, that was saying that this analyst was looking at how much crypto is actually floating around, how much Bitcoin is floating around the crypto space. Now, we know 17 million coins have been mined, and they say 4 million of those have been lost, questionably. But that's a good estimate, and they're pretty confident about that. But the analytics show, that in fact only about 1 million out of everything that's out there is in fact going around in a cycle, but actually moving. What does that mean? That means exactly what you just said, in the sense that you have experienced hodlers holding this bad boy with 2 hands and feet, and they are not letting it go. They are holding on to it with everything they've got, which makes it even scarcer again. So we have very little to mine comparatively to how much was in the entire code to start with. And then you have even less going around there. And then when you get these new waves of people coming in, so you've got sort of institutional who are already in there. You have the individual, which is you and me, the hodlers, but we don't count for anything in the world population. We are a super, super, super minority. And noting the amount of money we have comparative to, I don't know, Facebook or a bank, we've got no money. And then you've got governments coming in. So governments should make investments, and those investments could be anything from infrastructure to gold to human resource to education, etc. And once you actually start getting governments, any government, first, second or third world government, democratic or otherwise, once they start pouring in, and in fact, if there's an argument that some have already been doing it for a while, some of the, shall we say, communist governments have already been buying in the background. It's difficult to prove, but this avalanche, I like the analogy, this avalanche of suddenly it's all going to come in. You're not going to be able to get this stuff, and the price is just going to go berserko.
And here's another point. Here's another scenario that I'm going to play out that just popped into my head right then. Currently, most of the miners mining Bitcoin are, shall I say, entrepreneurs, are businesses that are mining Bitcoin. They're selling the Bitcoin to fund operations. So they mine it, they sell it. Some of them may be holding it for treasuries to get some price appreciation in the future. Most of them are probably selling 80-90% to pay employees, to pay hardware costs, to replace equipment. When we start seeing serious players in this that can take a loss for 2 years, 3 years of mining to wait for the price to double or triple in the future, that's when you're going to start to see some insane price moves, because the Bitcoin being mined will not be coming onto the market. It'll be going to deep, cold storage. And every single bull market spawns a whole new generation of hodlers. It spawns a whole new generation of those who are starting to be trained in low time preference. This is the thing. We use hodlers as a meme, and it fits perfectly. But on a deeper level, this is people who are changing their socio-economic status and mindset to low time preference holding for the long term. So it is incredible what Bitcoin is literally doing in real time to people that get involved. And you know what, man? I'm so excited for the future.
Yeah, and the theory of mining at a loss is not unheard of. Real mining companies have been doing it for decades, centuries, where if you can afford to take the loss, you pull gold out of the ground, you stockpile it, you wait till the market's selling at a good price, and then you sell it. And if you can afford to take a loss for a year or so, in fact, even on a micro level, I'm actually what you just described. I have been mining at times for a loss, and I think right now, at the moment, not so much with my Litecoin, that's a positive return, but certainly on the SHA-256, I'm mining, I wouldn't say at a loss, but I'm not making a huge profit margin on my Bitcoin mining, but I don't care. I got other money, and I'll just stockpile this stuff in deep cold storage, as you said, and then in 2 years' time, when I choose what color Lambo I want, I'll go get it.
And that's the thing. Don't underestimate this flow-on effect to other miners like Adam and bigger players, really big, well-funded players, potentially governments and states, who can afford to take a loss for 2 years, who don't sell this Bitcoin. You're going to find that million Bitcoin that may be floating around on markets goes down to 900,000, goes down to 800,000, goes down to 700,000. And it just becomes perpetually more and more scarce over time. I mean, the only thing to happen for Bitcoin is to become more scarce. It will never become less scarce. It can't, just because of the natural cycles and how it moves, and the mining algorithm that halves the reward every 4 years. So, like, this is the super investment of the century.
That's
the way.
Another thing I heard today. That we'll never have an opportunity like this in a lifetime, in 2 lifetimes again. There is nothing like this with these huge returns.
And that's just my personal opinion. That's just my personal opinion.
Yeah, not financial advice.
Not
we don't give
financial
advice on this channel.
I mean, the performance of Bitcoin over 300% since February. I mean, come on.
Even on if you look at a 10-year chart of crypto on Bitcoin, it's a 10-year chart. There is nothing out there. Nothing. Nothing. Even with the so-called crash of 2017, 2018, nothing comes close to Bitcoin. Not even slightly close to it. And in fact, I saw another one that they did over a century, and there was essentially nothing that has done anything like crypto. But for the daily trader, as we know, if people are wondering, well, if no one's using Bitcoin, if everyone's just using it as a store of value, well, sure, that's what you got Litecoin for. That's what you've got some of your altcoins for. And it's just because you're holding, and if people are worried about, well, no one's going to spend it, well, just think of gold. People don't go to the shop and use gold. In the olden days, we had a banknote where you actually put your gold into a vault, and they'd write a banknote, which then became fiat currency before they delinked it. And you would just walk around saying, well, this is a representation of what's in that vault. Now, Litecoin's going to be a bit different because it's going to have its own inherent value, because it too has been mined, and it too is scarce, and it too is a bit faster. But yeah, don't get bogged down on crypto, Bitcoin being locked in a cold storage vault. There are other options out there, and it will be the backbone of everything moving forward.
Very exciting stuff, mate. Look, let's move into our weekly coin picks.
Yep.
Adam, what do you got for us this week, mate? Well, what did we cover last week?
Well, I'm very happy with my pick for last week. So last week I was speaking about Justin Sun.
Oh, you were the Tron boy.
Oh, check it out. And
18%.
You like that?
It's not bad. You beat me. You smoked me. I went Litecoin. A measly 2.56%.
Oh, I got you. Smashed you. I think we're evening up again. You and I operate like a pendulum. I think I got the first few weeks, and you got the next few weeks, and then I'm coming back strong.
They should make an index fund of both of our picks. I reckon that'd be all right.
Well, I tell you what, I'm actually concerned about some of the people who are promoting on fellow YouTube channels in the YouTube community. What I am seeing on a side note, Bo, is that a lot of people are, I can see where the pressure's coming in. They're getting sponsors coming in saying, do this margin trading, do this margin trading. Now, credit to those who, not all, but some who are advertising it as a plug for their video. They're really warning you, be careful with margin trading. You really have to know what you're doing. So I don't advise it. You've got to be a really successful player in trading. And even then, the risk is so great comparative to the reward. You get little wins here doing longs and shorts. Be careful of the margin trading, but getting back onto the charts, Bo, I've got 18.63% in Tron after, I think, in my opinion, it was because of the conversation between Sun and Buffett, or probably just because I recommended it. We'll go with that. And for you with Litecoin, it's still a good growth there, but let's face it, that thing had a really long run up, and it's still growing, so it looks good to me.
Yeah, it's interesting. It seems like the market priced in the halving event a bit earlier than I anticipated. I thought there'd still be some room there, but it looks like it priced it into around 30 to 40 days out from the event itself. Don't know if we'll see a whole lot of growth Litecoin now. Bitcoin's the star here. It's stealing the capital from all the altcoins, but there's still obviously some picks out there. Adam, do you have a pick for us? Do you have something
I do,
in mind?
and I release a disclaimer that I'm morally conflicted with this one because I don't like this coin, and you can probably see where this is going, but this is a coin pick, and we're talking numbers here, people. And if you want to know my opinion on what's going to move the most in the next week, I think this coin, I can't believe I'm saying this, but I've got to keep it real with you and our viewers. Given the news of this coin and what's happening in the background and where it has gone and where it can go and where it is sitting, forgive me, crypto gods, for I have sinned, but I am picking XRP for the next week ahead. You watch this thing, man. XRP is going to go insano. In fact, I'm going to go a step further, Bo. I reckon you might even see this thing get close to $1.
Tell us, what's your rationale?
There are so many deals that have been signed with XRP. So XRP, in the first instance, crypto is not really understood by most people in the crypto space, and many people support XRP. And a shout out to one of my subscribers. I got into a good conversation with him in the comments. I won't mention your name in case you're shy, but we fundamentally disagreed with me not liking XRP and him liking XRP. But what was beautiful about our debate, Bo, is that he said, I don't agree with this. I said, I don't agree with that. But what was beautiful in the crypto community was, in fact, our end state was identical. But the paths to this end state were different. And that's what I've actually found in the XRP community. The end goal is, in fact, to an extent, except for breaking away from the banks entirely, but what we were arguing in parallel was quicker and cheaper remittances for the third world country. That's what we agreed on. But as you and I know, Bo, and others would agree also, is that yes, it's cheaper and quicker for remittances, but you don't need a third party to do it. However, because we are still transitioning and because many people aren't completely onto the decentralized model of Bitcoin, people feel more comfortable using a third party, which is XRP and MoneyGram and Western Union as an example, who's not using XRP. And the other thing, Bo, besides all these deals that are being signed in the background, besides all these banks that may be using XRP and third parties, is that I did have a thought experiment. If I was in Nepal and I wanted cash in my hand, and I'm used to going to Western Union or MoneyGram or somewhere, and you and I in the first world say, hey, I'll just text you the money. Well, if I'm a real poor third person in Nepal and my husband or wife is over in the Middle East earning money, they can't quite do it yet because I don't yet have the infrastructure to do it. And as a transitionary period, I still go down to the bank to get my cash out from Western Union or MoneyGram or whatever. But the background technology in the background is XRP doing that transmission quicker. So a big rant there. Ultimately, there has also been a lot of discussion that big players, big whales, have been purposely keeping the price of XRP down so they can stockpile it in the background. And whilst they're stockpiling it in the background, as soon as this avalanche within XRP goes on, all the naughty and cheeky whales that have been stockpiling it at a very low price are going to ching, ching, ching cash in. So this is not me saying I like XRP. This is not me saying I like it for the years ahead. It is me saying that in the week ahead, just 7 days, you're going to see big growth in this coin.
Very interesting. Look, I've got a bit of a wild card too, although those that have followed me for a while are going to know
Bitcoin SB?
Oh, come on, man, you're killing me. No. I know someone in the comments is going to be a bit triggered over that, my friend.
I'll go for Bitcoin Cash then.
No, this one's Ethos, and I invested into Ethos actually in the ICO, and it's gone through a lot of changes. The company was acquired by Voyager. Voyager is the commission-free brokerage founded by the likes of executives from Uber, from I think E-Trade, from some really big successful companies. Now Voyager acquired Ethos and all of its tokens. So this was one of the firsts, if not the first, in the entire crypto industry for a crypto company and its token to be acquired and pulled into another company. Voyager have gone public. They did so by acquiring an already public company, essentially subsuming the business and their stock and doing so. Now, this was really complicated, and it took me a long time to kind of get my head around how this was going to work. So essentially, Voyager acquired Ethos. Ethos is a universal wallet with its own token, but they also built a foundational API called Bedrock. Bedrock was going to be used by other businesses, like as a blockchain software as a service, that would require the Ethos token as value exchange for API calls. So there was this really interesting value proposition where if Bedrock gets used by a lot of companies, these companies are going to need Ethos tokens for payment for API calls, right? And Ethos has a really good product in Bedrock and their wallet. So I was kind of skeptical for a while, but some pretty big news has just come out today. And by the way, I've hodled the whole way through, but some pretty big news has come out today. They haven't got it here on their Twitter, but Voyager has now gone live in 49 states in the United States. Now, this is a pretty big deal because I believe they're the only company to have done so, to go live in 49 states. This is in light of the quite risky regulatory situation in the United States with the likes of Binance.com closing off access to US customers. Voyager's just gone live in 49 states, commission free. People are saying that they are connecting their bank account. They're signing up, they're downloading the app, connecting their bank accounts and buying crypto within 3 minutes on the Voyager app. So things are looking very promising. And if this app comes with a lot of success, they're going to be integrating Ethos Bedrock for institutional grade products and the token into as many systems as they can. They have said that on multiple occasions. So whilst it's a grey area at the moment, this could be really promising for Ethos and the token in the future. I do feel like it's a high risk one. I feel like it's just going to be hard if people do want to make a purchase of this. It's going to be hard for them to learn the full history, but I do see it as a potential opportunity. Short-term gains within a week, probably not. 3 to 6 months, maybe so. We'll see what happens.
I'm impressed that you're going for the higher risk, currently ranked at 332 on the charts. I bought Ethos over a year ago. I just liked the logo. I'm not even going to pretend to be smart here and here. I thought it looked pretty. It came out on CoinSpot. I'm like, yeah, I'll throw $100 at that. So hopefully this one does get up there. And I'm good to see you. I'm happy to see you balancing your diet with higher risk coins, because you're always sticking in those top 10. So good on you, Bo.
Oh, thank you, mate. I appreciate it. Look, the micro caps need some love here and there. There's still opportunity in the micro caps. You just got to really know your stuff. And
it's only got a market cap currently of 10.9 million. So
pretty amazing considering this coin was once ranked 52.
Yeah.
And hit $10 US at one point. Unbelievable.
Now, just on that, it's in many of the instances when you think about, as you said, it was right up there at the top. I like to glass half full say it's not so much that Ethos and coins like it have dropped in, I don't want to say value, but in utility. It's that other coins have come in that are just so good. And this goes back to the maturity of the market. There's a lot of competition out there. There's some really good programs with some really good back ends and some really good teams and some really good community behind it. It's competitive out there, and competition drives innovation, and innovation drives success.
Agreed. And this market is continually evolving. It's changing. The dominance of Bitcoin against other cryptos changes from month to month. It's evolving, and you just have to be aware of that, aware of the risks, know your stuff, and to keep your ear to the ground.
Bo, before we close off, I want to just quickly push this out and apologise. I promised last week that I would do an interview with an accountant. Now, I did do that interview, and it's the first time in 2 years of recording that I have lost a recording, and I am absolutely gutted. The accountant was great. He gave up his Saturday afternoon. His name is Andrew Ryan, and he is from Bates and Pickering. He sacrificed his afternoon. I did the recording. I even did a test, and I went back. I went to get a cup of tea, came back. For some reason, the computer had crashed. I'd seen it before. I restarted my computer. File corrupt. I even sent the file back to the Camtasia, to the people I use to do my videos, and even they said, we don't know what's going on. So I apologize to the viewers. I made a promise. I did do the interview, but I couldn't release it. The good Andrew Ryan from Bates and Pickering is going to do the interview again this Sunday. So stand by. This is important to all of us in the crypto space, because we want to be compliant. And there have been questions about tax. And I will actually just make reference to a video that you did a while ago, Bo, to plug an interview that you did with an accountant. I think it was a year and a half ago, with an accountant about tax. So guys, check out Bo's video, and make sure you also, if you're new to the space, check out a lot of Bo's work, subscribers, of what Bo has done with a lot of his courses that are available out there. Link below. If you want to get a sound understanding to what's going on in this space and how you can make more money, look at investing in these courses. They are fantastic and well worth the investment.
Adam, thank you for the plug. And guys, the first course, Cryptocurrency Investment Fundamentals, is free. It's held on Udemy, completely free, no strings attached. It's free. Thousands of people have done it. Why not? 60 lectures, 4 hours of content. If you're new, you want to get up to speed. The only one that costs money is the new course, which is Cryptocurrency Opportunities and Trends for 2019, where I discuss the really trending, exciting areas where I think there's opportunity. But look, on that note, Adam, thank you for the plug. Guys, thank you so much for watching. We're pretty much bang on an hour. I think this was a jam-packed, really good episode. Really happy with it. Really appreciate your continued support and comments, guys. If you liked the video, likes help us massively, because it helps YouTube's algorithm know that we're getting engagement and people are enjoying the content. Therefore, they're more likely to recommend it to others. If you're not subscribed to me, make sure to press the little subscribe button. If you're on Adam's channel, make sure to subscribe to Adam. Just a couple of Aussie crypto YouTubers trying to make a way in the crypto space. A lot of competition out there. But look, guys, thanks again for watching. Really appreciate your time. Adam, over to you for closeout.
Yes, thank you, Bo, and our crypto community. A click for us really does appease the algorithm gods. 2 clicks makes it even better. 3 clicks, which is a like, subscribe, and bell, is even better. Again, closing off tonight, Bitcoin sitting at $11,343 on the 25th of June 2019. Thanks for listening. Happy investing. We'll talk to you next time.
See you guys.